Hey everyone, and welcome back to The Explainer. Today we're diving straight into the monthly Newswire for May 26. And as we were putting this together, one huge central theme kept popping up, something I know every single business owner and professional grapples with on a daily basis. That theme? Regaining control. It really is like a giant puzzle. We're going to explore a specific roadmap today that we like to call our control and compliance arc. The goal here is simple. Taking firm, proactive control over both your personal wealth and your business's compliance obligations in what is, frankly, a rapidly shifting landscape.
So to get us there, here is our roadmap. We're going to start with mastering personal finances and look at the latest state pension updates. From there, we bridge right over into the business side, stopping fake reviews, avoiding subscription traps, getting ready for mandatory e-invoicing, and finally, navigating the new mental health and sick pay rules. Let's get to it.
Section 1. Protecting your wealth. Mastering your personal finances.
Okay, let's dive into this. It's incredibly common to pour absolutely all your energy into your business, only to wake up one day and realize your own personal financial house feels, well, kind of disorganized. So why do financially successful business owners still feel completely out of control? It's a fascinating paradox. Your business might be absolutely thriving, yet you feel totally in the dark about your personal financial trajectory. For a lot of owners, wealth builds up over time, but it does so very unevenly. Think about it. You might have old pensions that were opened purely for a tax break years ago, personal savings from a couple of highly profitable years, or maybe you just have surplus cash sitting in the business for a rainy day. Add the fact that your income fluctuates, tax rules are constantly shifting, and your personal financial decisions are usually dictated by whatever the business needs right this second, and it all creates a massive blind spot when you're trying to picture your personal future.
So, what's the practical fix to get out of this confusion? Honestly, you need to start by getting the whole shebang onto just one page. If you can't easily answer the question, what do I have and where is it held, you need a basic financial summary. It doesn't need to be some complicated academic spreadsheet. Just write it down, list your pensions, including those old workplace schemes you forgot about, note down your personal savings, investments, surplus business cash, your mortgages or long-term borrowing, and an honest estimate of the eventual value of your business. Literally just listing your current values and monthly contributions gives you an immediate sense of perspective. But there's a second, absolutely crucial step here. You have to be incredibly clear about what each pot of money is actually for. Right? Is that surplus cash in the business a true emergency buffer, or is it earmarked for a massive future tax bill? Are your long-term investments for retirement, or are they going to pay for university costs? Giving each pot a highly specific purpose prevents you from being overly cautious, or worse, dangerously exposed without even realizing it.
Section 2. Protecting your wealth. State pension age and rates.
You need to constantly question your long-term retirement assumptions, especially when the government decides to shift the goalposts. Your previous numbers might already be out of date. This past April brought an automatic 4.8% increase in both the basic and new state pensions, and that's entirely driven by the government's triple lock guarantee. For many pensioners, this means an extra $575 a year. The full rate of the new state pension has jumped from $230.25 to $241.30 a week. Meanwhile, the full basic state pension is up to $184.90 a week. Now, if you are planning to rely on these figures at all, it's absolutely vital to update your one-page financial summary with these new automatic increases.
And this brilliantly illustrates the other side of the pension equation, the exact age when you can actually claim it. Because while the weekly amounts are increasing, the state pension age is currently climbing from 66 to 67. Beginning this coming April 2026, the timeline shifts, but it happens gradually. For instance, if you were born between April 6th and May 5th, 1960, you're going to have to wait an extra month. Born between May 6th and June 5th of that same year, you wait 2 extra months. By April 2027, the age will fully hit 67 across the board. This reflects our longer life expectancies, but frankly, it's a massive signal. A lot of us need to plan our personal finances around the very real possibility of working well into our 70s.
Section 3. Protecting your business, spotting and stopping fake reviews.
All right, we are now officially pivoting from protecting your personal wealth over to protecting your business, and let me tell you, the stakes here are incredibly high. We're moving into operational compliance, specifically looking at how consumer laws are being aggressively enforced right now. Under the new Digital Markets Competition and Consumers Act 2024, obtaining fake reviews, hiding the negative ones, or using paid-for reviews without crystal clear disclosure is strictly outlawed. And the Competition and Markets Authority, the CMA, is not messing around. They have launched active investigations into 5 major players. AutoTrader and FIFO are being looked at for allegedly suppressing one-star reviews. Dignity is under scrutiny to see if staff wrote positive reviews. Just Eat is being investigated over inflated star ratings, and Pasta Evangelists is being looked at to see if they offer discounts in exchange for 5-star reviews without actually disclosing that fact. Now, while these are just investigations right now, the warning to your business is severe. If found guilty, fines can reach a staggering 10% of global turnover. I mean, that is a business-ending number for many.
So how do you spot the fakes? Whether you're a consumer yourself or a business monitoring its competition, the CMA lays out 4 really straightforward rules. First, read the actual text. Don't just stargaze. Dubious or totally unrelated text is an immediate red flag. Second, watch out for AI. If a review feels unnaturally slick and perfectly polished, it's probably artificial. Actually, scratch that, it almost certainly is. Third, check the 3- and 4-star ratings. That is exactly where the honest gripes live, giving you a much truer picture of the core service. And finally, cross-reference across multiple sites to spot any obvious coordinated patterns.
Section 4. Protecting your business. Escaping costly subscription traps. Protecting consumers obviously doesn't stop at honest reviews. It extends directly to honest billing. We've all fallen into a subscription trap before, right? You sign up for a quick free trial, completely forget to cancel it, and boom, you're hit with an absolutely massive bill for the year. It's incredibly frustrating. Well, by spring 2027, the government is bringing the hammer down on this. If your business relies on subscription revenue, you need to prepare for these stringent new rules right now. The law will mandate incredibly clear, simple information before a user even signs up. You'll be legally required to send reminders before free trials end or before annual contracts automatically renew. Cancellations must be straightforward. That means if a customer signed up online, they must be able to exit online just as easily. No more making them call a retention hotline. Plus, there's going to be a new 14-day cooling-off period after a trial ends or a contract renews, which allows consumers to get a full or proportionate refund for services canceled within that window.
Section 5. Protecting your business, preparing for mandatory e-invoicing. Now we're moving from consumer protection directly into operational tax compliance. The shift to structured digital formats is about to become a very big deal. But now, what's really interesting about this is the massive gap right now between simple awareness and actual adoption. In the Autumn Budget 2025, the government announced plans to make e-invoicing completely mandatory for VAT invoices starting in 2029. And just to be clear, e-invoices are structured digital files that integrate directly with accounting systems. We are talking no more PDFs or paper mail. But look at the reality of the numbers here. While 59% of SMEs say they know about the mandate, only 29% are currently using it in any capacity, and a mere 10% are actually both sending and receiving e-invoices right now. I know 2029 might sound far away, but integrating this foundational shift into your accounting software is something you should absolutely begin exploring today. You want smooth, accurate tax returns in the future, not a massive headache at the deadline.
Section 6. Protecting your business, mental health, and sick pay.
All right, for our final stop on today's compliance arc, we are looking closely at your workforce. Operational rules are intersecting heavily with employee well-being right now, and it's fundamentally changing how sick pay is managed. Here is a staggering statistic from a recent ACAS-commissioned YouGov survey. Almost 1 in 3 employers are now seeing mental health problems, like stress, anxiety, or depression, cited as the main reason for absences. This matters immensely to your bottom line because the Employment Rights Act 2025 comes into effect on April 6, 2026. This new law makes workers eligible for statutory sick pay from their very first day of illness, rather than having to wait until the 4th day. Furthermore, the minimum earnings threshold for eligibility, that has been completely removed.
So the crucial point is, how do you proactively manage these incoming costs while genuinely supporting your team? ACAS has 4 rapid-fire strategies to help. Number 1, provide active training to your managers on how to effectively and empathetically support employees going through a period of illness. Number 2, offer flexible working where you can to promote a much healthier baseline environment. Number 3, step in and resolve workplace conflicts early. Nip them in the bud before they escalate and spark stress-related absences. And number 4, maintain crystal clear, highly accessible illness and absence policies so expectations are set well in advance of anyone actually needing the time off.
And just like that, that brings us to the end of our explainer. We've journeyed from organizing your personal wealth pots and navigating pension age hikes, all the way through to battling fake reviews, updating those subscription models, adopting e-invoicing, and overhauling sick pay for mental health. It's a lot, I know. So I leave you with this final thought to chew on. The rules for 2026 and 2027 are already written. Are you going to proactively ride the wave of these compliance shifts, or are you going to risk being caught completely off guard? The timeline is set. It is time to take control of your roadmap. Thanks so much for learning with us on this explainer, and we'll see you for the next update.